The financial world is bracing for a cautious start to December, with a risk-averse sentiment sweeping across markets. But what does this mean for investors and traders? Let's dive into the details and explore the potential implications. Markets take a cautious turn. On Monday, December 1st, global financial markets exhibited a cautious attitude, with U.S. stock index futures experiencing a decline of 0.5% to 1% during the European morning session. This sets the tone for the week and the month, suggesting a more conservative approach from investors. Asian data disappoints. In the Asian session, China's manufacturing data revealed a contraction, with the rating dog manufacturing PMI slipping to 49.9 in November from 50.6 in October. This unexpected downturn, falling short of the anticipated 50.5, has implications for the region's economic outlook. Australian dollar to US dollar edges lower. After a strong performance last week, the Australian dollar to US dollar pair retreated on Monday, trading below 0.6550. This movement could be influenced by the Chinese data and the overall risk-averse sentiment. US dollar index's volatile week. The US dollar index had a turbulent week, losing over 0.7% due to dovish comments from Fed officials, which fueled expectations of a 25 bps rate cut in December. Fed Chair Jerome Powell's participation in a panel discussion is noteworthy, but he's unlikely to discuss monetary policy due to the Fed's blackout period before the December 9-10 meeting. US dollar performance. The US dollar's performance against major currencies over the last 7 days is presented in the table below. The New Zealand dollar emerged as the strongest against the USD, while the Australian dollar saw the most significant gains. Base currency currency percentage change. USD EUR minus 0.67%. USD GBP minus 0.86%. USD JPY minus 0.59%. USD CAD minus 0.81%. USD AUD minus 2.01%. USD NZD minus 0.48%. USD CHF minus 1.28%. BOJ Governor's warning. Bank of Japan Governor Kazuo Ueda cautioned that delaying an interest rate hike for too long could lead to sharp inflation and force the bank to make sudden policy changes. This statement adds an intriguing layer to the ongoing rate hike discussions. US dollar to Japanese yen under pressure. The US dollar to Japanese yen pair faced modest bearish pressure, declining towards 155.50 early Monday, potentially influenced by Ueda's comments. Euro to US dollar consolidates. Euro to US dollar maintained a relatively calm stance on Monday, consolidating last week's gains just below the 1.1600 level. Eurozone inflation data due on Tuesday could provide further direction. Gold's bullish start. Gold began the week on a bullish note, reaching its highest level since late October above $4,250 in the Asian session. Despite a minor correction, it held strong above $4,200 in the European morning. GBP/USD's mixed performance. Pound sterling to US dollar recorded minor daily losses on Friday but gained approximately 1% for the week. The pair edged lower towards 1.3200 as the European session began. Risk sentiment explained. In financial circles, risk-on and risk-off are common terms that describe investor sentiment. During risk-on periods, investors are optimistic, favoring risky assets like stocks and commodities, except gold. Conversely, in risk-off periods, investors seek safer options like government bonds, gold, and safe haven currencies. Commodity currencies and risk-on. Commodity-dependent currencies like the Australian dollar, Canadian dollar, and New Zealand dollar often thrive in risk-on environments. This is because rising commodity prices, driven by increased demand expectations, boost these economies. Safe havens in risk-off. In risk-off periods, the US dollar, Japanese yen, and Swiss franc typically gain strength. The US dollar's status as the world's reserve currency and the perceived safety of US government debt play a role. The yen benefits from demand for Japanese government bonds, while the Swiss franc's appeal lies in Switzerland's stringent banking regulations. And here's where it gets intriguing. Are central banks' rate hike decisions truly independent, or do they consider global market sentiment? Share your thoughts below, and let's spark a thoughtful discussion.